The biggest mistake investors make is thinking short-term in a long-term game. Because the difference between average investors and wealthy ones isn't what they buy, it's how they think. And once you shift this one mindset, everything about investing changes.
All right, let's just cut through all the noise, right? Forget the daily market headlines, the panic, the hype. Today, we're going to talk about a really fundamental shift in how you should think. It's about stopping the worry over the next 10% move your portfolio might make and starting to focus on the next 10 years of your life. Let's get right into it. This quote, man, it really is the heart of everything we're talking about today. You know, we're all wired to get obsessed with the short term, that next quarter's earnings, that next dip in the market, but real, life-changing, compounding wealth, that's not a one-year project. It's a 10-year project. This is a great reminder that your most powerful tool as an investor isn't some hot stock tip. It's just having a long-term vision. So here's the game plan for today. First up, we're going to rewire our brains for the long haul. Then we're going to play some defense, and I'll show you how to avoid the big traps that sink most investors. After that, we go on offense. We'll look at a simple framework for finding great companies, and we'll apply it to the massive AI shift happening right now. And finally, we'll pull it all together into a plan you can use for your own 10-year horizon. Okay, so first things first, perspective. I mean, think about it. Every single day, you're just bombarded with drama, right? Geopolitics, inflation, recession fears, crazy market swings. This section is all about learning to see that stuff for what it really is, short-term noise in a very, very long game. Just look at this timeline for a second. The dot-com bubble bursting, the 9/11 attacks, the 2008 financial crisis, a literal global pandemic. Each one of these felt like the end of the world at the time, didn't it? It felt like that's it, sell everything, the game is over. But now, with a little hindsight, what are they? They're just blips on the radar, temporary storms that always pass. And here's the result of just weathering those storms. Despite all that panic and chaos, what happened to global wealth? It didn't just survive, it absolutely exploded. We're talking from around $52 trillion back in 1989 to well over $200 trillion today. The lesson here is so clear. The long-term engine of human progress and innovation is just far more powerful than any short-term crisis. And if you want to see what that innovation actually looks like, check this out. Back in 1989, the most valuable company on the planet was an oil giant, Exxon, worth about $64 billion. Now fast forward, and a company like NVIDIA, which is literally building the infrastructure for AI, is projected to be worth $4.6 trillion. This isn't just about the numbers getting bigger. The entire nature of how we create value has fundamentally changed.
I love this analogy because it's so perfect. A market crash is exactly like spraining your ankle. It hurts. It hurts a lot in the moment. You're limping around, feeling miserable. But in the context of your entire life or your multi-decade investing journey, what is it really? It's a temporary injury. It heals. It's a painful blip for sure, but it is not the end of the story.
All right, so we've got our long-term mindset locked in. Now let's talk about playing some defense, because before you can even think about winning the game of investing, you have to make absolutely sure you don't lose it. So this part is all about identifying and avoiding the money sucks, these common traps that can quietly and completely drain your portfolio. So what are these money sucks? Well, it's pretty simple. They're any activity that's pretty much guaranteed to put the odds against you over time. We're talking about things like speculative options trading, trying to jump in and out of the market every day, and using borrowed money or margin. Let's be really clear, this stuff isn't investing, it's gambling, and they're designed to destroy your wealth, not build it. This really illustrates the choice you have to make. Think about it like you're in Vegas. Are you going to be the gambler, sitting at the table, hoping for a lucky streak while fighting against the odds? Or are you going to be the house? The house is the odds. By patiently owning a piece of great, productive businesses over the long term, you stop being the player at the table and you become the casino itself. Okay, defense is set. We know what not to do. Now for the fun part, offense. This is the proactive stuff. How do we go out there and actually find these great companies that we want to own for the next decade? And spoiler alert, it's not about some secret complex algorithm. It's really just about learning how to understand the story of a business. And here's a super simple 3-step framework to get you started. First, you've got to learn the language. The financial statements, they're not scary. They're just the story of the business told in numbers. Second, you become a bit of a futurist. Based on those numbers and the company's strategy, you ask, where could this company realistically be in 3 to 5 years? And third, you do a quick gut check, a SWOT analysis. What are its strengths, weaknesses, opportunities, and threats? When you follow this process, you stop thinking like a stock picker and start thinking like a business owner. So let's make this real. Let's take that framework and apply it to one of the biggest trends happening right under our noses, a trend that the daily headlines might actually be missing. I'm talking about the massive shift to AI that's happening inside enterprise software. So the key concept to grasp here is something called agentic AI. Now, this is a huge leap past your simple chatbot. We're not talking about an AI that just answers your questions. We're talking about an AI that takes action. It can, all by itself, manage a complex process from start to finish, like, say, resolving a customer's shipping issue across multiple departments without a single human ever having to touch it. That's the game changer.
And as you can see, two absolute giants are at the front of this race: Salesforce and ServiceNow. A really simple way to think about them is that Salesforce handles the front office, all the customer-facing stuff, and ServiceNow handles the back office, the internal engine that makes a business actually run. And the crucial part? Both of them are sitting on these massive mountains of customer data, which is basically the perfect rocket fuel for their new AI platforms.
And listen, this isn't some pie-in-the-sky, maybe someday thing. The revenue is already pouring in. Salesforce's AI platform is on a run rate to hit $800 million in recurring revenue. I mean, that's a massive high-growth business that exists right now.
And it is the exact same story over at ServiceNow. Their Now Assist AI is targeting over $1 billion in revenue. See, this AI isn't disrupting their core business, it's supercharging it. It's making their platform stickier and way more valuable than they've ever been. Okay, let's zoom back out and bring it all home. We've covered the mindset, the defense, the offense, and we looked at a real case study. So the big question is, how do you actually apply all this to your own 10-year financial journey? Well, it really all boils down to this checklist. This is your game plan. Number 1, your focus is on the next decade, not the next day. 2, market crashes aren't threats, they are opportunities, they're sales. 3, own the house, don't be the gambler. 4, do the homework, learn to understand the businesses you own. And number 5, train yourself to spot those huge, quiet trends that are happening right underneath all the loud daily noise. And so we end right back where we began. Stop trying to predict what's going to happen next week. It's a fool's errand. Instead, ask yourself this question: what can I build over the next 10 years? Because with patience, with discipline, and with that long-term perspective, the answer is probably way more than you can possibly imagine right now.
If you want to think like a long-term investor, not a short-term trader, subscribe. That's what this channel is all about.